Good morning, Campbell McCrary here, Amvest Capital in New York City. Welcome to the Amvest Capital Inc. live webinar with MetalsTech Limited. MetalsTech trades on the ASX as MTC, Mike Tango Charlie. Hope you enjoy today's program. It'll be available in on-demand replay in about an hour, and you can find it in our follow-up email and at amvestcapital.com/replays and on various social media platforms tied to Amvest. Feel free to send in your questions and just use the question pane of GoToWebinar and we'll ask them in real time. Questions are really quite welcome. Amvest is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. Everyone has a disclaimer these days, including Amvest. This call is most definitely for informational purposes only. So please read this carefully. Pleased to have with me Russell Moran, who's the chairman of the company, and Gino Dana, who's a founding director. So Russell, I'm going to make you presenter. And gentlemen, if you want to turn on your webcams when you get a moment. Russell has a background in strategic business development and is a proven natural resources and technology investor with a track record in building public companies as well as M&A. He's also the chairman of 3G Coal, Zingiferous Limited, and Wadijina Resources. Gino Dana, founding director, significant primary and secondary capital markets experience, and a particular experience in Canadian government and First Nations relations in the mining sector. So, gentlemen, welcome to the show, to our program. You've got, as long as you want, tell the story, and see you in a few minutes.
Great. Campbell, just confirming you can see that?
Yes, I can.
Wonderful. Thanks everyone for dialing in. Yeah, as Campbell said, we're listed on the Australian Stock Exchange on the ticker MTC. We're also listed on a couple of the German exchanges, including the Frankfurt Exchange on the MT1. What I'll do is I'll start with a little bit of background about the genesis of the company and lead into sort of how we got to where we are, and then I'll push through the project metrics, and then we can open up for Q&A at the end. So MetalsTech listed in around 2017. We're actually listed as a lithium exploration company. The core assets of the company were a suite of hard rock lithium assets in Quebec, in Canada, and we spent sort of 2 and a bit years drilling up primarily one project in particular. For those of you that follow the battery metal space, lithium space, the market took a turn, and we essentially took the view that for the money that we were spending, and we obviously have to, raise money and issue equity to finance our activities, we weren't getting any value during that market. So we turned the taps off on those projects, and we started looking in the gold space. Spent 6 or 9 months, and eventually settled on the Sturec Gold project in Slovakia, which is now the company's flagship asset. We bought that in November of 2019. So again, for those of you that follow the gold sector, that period of time was just before the gold sector and the gold price in particular started heating up. So we managed to acquire the project on some pretty attractive terms. It's an advanced project, so it's it's been held by the previous owner was a London listed company. Prior to that, a Canadian listed company called Tornagon owned the project, and then prior to that, it was actually owned by the Slovakian government. So that's the focus of the company. We still own the lithium assets that we originally listed with. They proved to be of reasonable interest to the market of late, and so the company's made a decision to actually try and monetize that position, and we're looking to spin those assets out into a new ASX listing, which hopefully in the next few days we'll be pushing out our shareholder approval meeting document, which is the precursor to actually getting our listing done, hopefully maybe in November this year. So what that means for shareholders is any shares that somebody owns in MetalsTech, you'll actually get some free shares in this new venture at some stage in the future, hopefully around November. So snapshot of the company, Share price around 25 cents. This is Australian dollar currency. Cash at bank, last reported 6.8 million. We're probably down to around 6 now. The reason why we've got that money at bank is that we recently did a royalty deal with a company called Lithium Royalty Corp. Some of you may know Lithium Royalty Corp. They're an offshoot of a company called Capital. Essentially, they're a lithium royalty company that invests in lithium royalties. Now, we are a gold company, but we do have those lithium assets, so we essentially sold a gross revenue royalty over those non-core assets for $5 million US, which we are now spending on our gold project. So those lithium assets are being spun out, and they've got a royalty now attached to them. So that was a great way for the company to get funded without issuing any shares. Debt, we have a $1 million debt, which we'll look to pay out in the next sort of month. That debt was related to some redeemable notes that we put in place in the company about 2 years ago, which essentially bridged us so we didn't have to raise equity at lower prices. So we've done quite well out of that debt piece, but we'll have to pay that back in the next month. Shares on issue, just under 160 million, market cap around 40 million Australian dollars, around 30 million US, something like that. Now we do have an advanced asset, so we have a JORC 2012 resource of just over 1.5 million ounces of gold. That's in an open cut basis. We don't see the project necessarily as a pure open cut project. We're actually looking to develop it as an underground mine in the first instance, with potentially an open cut phase of development later down the track. If you're interested in enterprise value per ounce, we're around $16 US per ounce based on the resource that we have. Top 40 shareholders speak for around 73% of the company. Management 27%, a little bit higher than that. It is the company is very near and dear to the heart of management. Campbell gave you a brief introduction into Gino and my background, but really what I'd like people to take away is that Gino and I are investors, and this is our investment. So we treat it like it's our money, and our only KPI is return on equity. We couldn't care less if we make money selling pillows, as long as at the end of the day we're making money from our equity, because that's where our interests lie. This is and you can refer back to this with the copy I think Campbell will make available. This is the JORC resource estimate. I'll go into some detail later, but essentially what we'll speak about later is that within the 1.5 million ounces that we've got around 600,000 ounces just around the 3 gram a ton mark. Now that's important for our development strategy because, as I said, we're looking to develop potentially an underground mine to start with, low impact, low environmental footprint underground mine to start with, and then move into open cut. So those 600,000 ounces are important to us. Just touching on that lithium spin out I spoke of before. So those wheels are in motion. The company is called Winsome Resources. It's being led by a man named Chris Evans, who was the Chief Operating Officer for Altura's Pilgangoora spodumene concentrate mine. Chris is a bit of a weapon in the space. He built the Pilgangoora mine or delivered that project for Altura. It's now owned by Pilbara Minerals. It's operating. It's producing spodumene concentrate, which it's selling to lithium carbonate facilities. So Chris is leading that. Canaccord Genuity are the lead managers. They're raising between $12 and $18 million. Why do we care? We care because as part of us spinning out those assets, MetalsTech gets $9 million worth of shares in that venture. It's a well-capitalized, it's going to be a well-capitalized lithium-focused venture focusing on North American hard rock assets, which is a great jurisdiction for that sector. We're going to get $9 million worth of shares, and we're going to give those shares to our shareholders. So what that means is roughly for every 3.5 MetalsTech shares you own, say they cost you 25 cents today, you're going to get one free Winsome share valued at 20 cents, which will be the listing price. So when you look at our market cap, the spin out, the value of the spin out's not insignificant. The other part to that deal is that the group Lithium Royalty Corp that gave us the $5 million US is also putting up to $3 million and that up to is at the discretion of Winsome Resources how much they take, is going to put $3 million into that venture to cornerstone it. So it's got industry buy-in, and I know the Winsome board are talking to some other notable players in the lithium space about assisting with cornerstoning that IPO. So we're excited about what's that going to do. So as far as timing goes, as I said, there's a couple of days before we lodge our notice of meeting. Once that's lodged, roughly there'll be a 4 to 5 week period before a record date is set. When that record date is set, it's at that date, whatever shares you own in MetalsTech will qualify for that in-species distribution. So I guess if at the end of this you're interested in purchasing MetalsTech shares to get the entitlement in the Winsome float, then you need to have done that by that record date, and that might be in 4 or 5 weeks' time. So there's some time. Just to give you a little bit of a who's who in the zoo. This isn't your zoo. This is our zoo over in Australia. But we're starting off with 1.5 million ounces. So as I said, it's not an early stage asset. It is an advanced asset. So 1.5 million ounces is nice. It's an epithermal deposit, so we're expecting that it's got large growth potential. But we'd like to see it go to sort of 2 or 3 million ounces to really attract interest, either on a joint venture basis or on a production funding basis, or potentially a sale basis to a larger player down the track. But 1.5 million ounces is a material start. As I said, market capitalization per gold ounce, we're at the early stage of our value recognition. You know, we do, part of the reason why we see our EV per ounce low is twofold. One, we're still at the early stages of developing the asset. We've only just completed our first drill campaign. We're yet to complete a scoping study and wrap economics around the project, but also the project's based in Slovakia. In Australia, Slovakia is equivalent to the DRC in that, you know, no one really knows where it is. And so we see a discount applied to it there on, you know, on a retail market basis. And one of the things we're going to do to address that is we're actually looking at a dual London listing later in the year to see if we can't capture that. I guess those investors that understand Slovakia as a usual place to do business. A point about that is around 20-25% of our share register is actually from Europe. So we do have a following over in particularly the German-speaking parts of Europe. One of the exciting things about the project when we bought it and subsequently drilled it and had success there was the geology of the deposit is very well known. So we managed to get, you know, my screen's just blocked here a little bit by this tab. 93% of the resource is actually in the measured and indicated category. So they're the two categories that you require. They're the confidence categories you require that have the ability to move across to reserve. So what that means is that there's lots of drill data. The deposit, at least where the resource is very well understood. Location-wise, the project's in an area called the Western Tethys, and it's sort of a, what would you say, northwest to southeast trend. Although there's not, there aren't any sort of major mines in Slovakia per se, there are a large number of significant mines within the same Western Tethys belt as you move sort of in that southeast direction. You've got groups like Dundee, Gabriel Resources is one that some people might know. There's Zijin Mining and Eldorado Gold, these sorts of groups. And they're developing either porphyry style deposits or epithermal style deposits. We've got an epithermal style deposit. On this map, you'll see one mine that's about 30 km south of ours at the top, called the Rosalia mine. It's a private mine. The reason why that project is somewhat relevant to us is that they are essentially doing the same business model that we would like to do. They're producing a gold concentrate, which they're selling into Belgium, and they're producing it from an underground mine. And that's essentially the same model we want to do. They're also mining from the same geology that our deposit sits in. I'll just tap that over. As I said, 1.5 million ounces of gold is what we have in our deposit. But in addition to that, the mining area, the historic production profile of the project's actually the same, 1.5 million ounces. So before we picked up the project over the last 100 or so years, there's been 1.5 million ounces of gold production from this deposit already. So these towns here, Kremnica, Bain and Kremnica, they were founded on this deposit. This deposit was a large producer of gold, and it used to feed a reasonably large mint, minted something like 20 million gold coins over the course of its life. So the area is not a stranger to gold mining. A lot of the houses in the town underneath Kremnica actually have access to gold mining at it. It's a prolific gold sort of area. We've got a 1.5 million ounces. It sits across a 10 square kilometre license. So in red here, you'll see that's the tenement outline. That little white circular area there, that represents about 1.1 million ounces of the existing resource. The additional 400,000 ounces sits a little bit south of that. But you'll see in that red zone, we're actually not a very large license. It's only 10 square kilometres. You can't go and buy the ground to the left. You can't go buy the ground to the right, north or south. These mining licenses are extremely difficult to get. This one's around 30 years old. They're court awarded. They're highly contested, and so there's a high barrier to entry. You can't just go and stake where you like in Slovakia. But one thing I'll come back to later in the presentation is just how prolific this 10 square kilometre area is. We think there's potential to have many times the amount of resource that we currently have, and later I'll explain why that's the case. As I said, there's 660,000 odd ounces at north of 3 grams a tonne. The reason why that's important is, again, we're looking at potentially doing an underground operation to start, and you sort of need at least 2.5-3 grams a tonne gold to sort of make underground mining work. So the development strategy for us is, it's had 1.5 million ounces historic gold production. We've got 1.5 million ounces remaining. It's an epithermal style deposit. They have the tendency to get big. How much bigger could it get with modern exploration? The deposit hasn't seen a lot of modern exploration. Even when the Slovakian government owned it, they didn't put it through a huge amount of production. And the last two owners of the project that were listed, one in AIM, one on, I think it was on the TSX, they focused very much on the sort of core deposit, the million ounces. We are the first company to actually start drilling along strike and down dip, and we're getting fantastic drilling results from those programs. So the strategy for us is to look at a bulk underground mining operation. Typically, when you go underground mining, you're vein mining. Sometimes those veins are thin, but you're typically looking at sort of generally narrow sections. This deposit's quite unique in that the thickness of the deposit is up to sort of 80 metres in true thickness. In some of our drilling, we're getting intersections of 140 metres, and when you allow for true thickness, you've got to halve them, but significantly thick intersections. So to do an underground mining operation, you actually have the ability to do some large-scale underground mining operation. One of the unique things about Slovakia, which has historically been a challenge for this deposit in low gold prices, is that the Slovakian government elected to ban the use of cyanide in the processing of gold-bearing ore. So what that means for a developer is when you dig up your ore and you put it through a gravity separation and then potentially a float circuit, if you want to take it any further with a lixiviant, typically we would use cyanide. That's what most people use. You can't use cyanide in Slovakia. So what you've either got to do is you've got to produce a concentrate, like that mine that's 30 k's south of us, and sell that, or you've got to use an alternative lixiviant like a thiosulfate or something like that. So what we've done is we've got a licensing agreement with the thiosulfate technology that came out of CSIRO, which was based in Australia. That's being used in the Gold Strike mine in Nevada by Barrick. And the other part of the business that we're looking at is replicating what that mine to the south of us is doing, which is building a mine based on a gold concentrate. Now, why that's exciting for us is because the gold price is currently amazing. I know lots of people say it's going to go north of where it is, but even if it sits above $1,400 US an ounce, which is, you know, $300 or $400 lower than where it is now, a gold concentrate model will work on this deposit. That's largely owing to the metallurgy. So probably the best thing about the deposit that we're exploring for is this metallurgy. We get a lot of gravity gold out of the first stage of the processing, and up to 88% of the gold can be recovered from flotation. So we're nearly getting 90% without having to put it through cyanide. And what that means is when you're building your mine and you're building your processing facility, when you normally have those three stages, gravity separation, float, and lixiviant processing like cyanide, they obviously each cost money. If we cannot have to put the cyanide processing in, we might be able to build the processing infrastructure for 60% of what it would cost otherwise. It also means that we might be able to put some of that infrastructure tucked in underground because cyanide processing typically has tanks which have height, they have a higher profile, they're a bigger footprint, so you can't do those sorts of things. So if we can stick to a concentrate operation, we might actually be able to put a lot of the infrastructure under the mine, which means we have a very low environmental footprint. The other thing that we'll be doing as part of underground mining is taking the waste material and putting it back down into the historic adits and into the mine workings as we mine. So we picked up the deposit in November 2019. We spent a lot of money, well, not a lot of money so much as we spent a lot of time auditing all of the data, getting a good handle on the geology, and then we started our maiden drill campaign sort of around this time last year. We drilled 16 holes. This is a summary of the holes that we drilled, and we got our final assays, I think, in April. It led to an upgraded resource, as I said, of 1.5 million ounces from the 1.1 that was originally there. I like to talk about the worst hole that we drilled. So the worst hole we drilled was UGA 08, 137 meters at 0.6 grams a ton gold. That was the worst hole we hit. The last hole we hit, which was a record intersect for the whole deposit, for the history of drilling the deposit, was 70 meters at 9.23 grams a ton gold. That was the last hole we hit. We've also hit intercepts like 19 meters at 4.2, 35 meters at 3.7, 70 meters at 3.4, 32 at 4.6, 90 meters at 3.88. These are thick intersections. Even if you halve them for true width, they're very thick intersections, and they're significantly above the minimum grades that you would typically, rule of thumb, require for an underground mine. So we're extremely excited about the drilling that we started last week, because essentially we're step out drilling from where this program, where we completed this program. This program roughly covered around 250 meters of step out drilling from the known resource, and now we're stepping out, you know, another 100, 150 meters, maybe 200 meters with this program. So if we continue with the drill results that we've got on the last program, we're hopeful that we'll get another tasty resource upgrade from that. This is a snapshot of the mineral resource. You can see basically the different colors show the different grade. You can see there's a high grade zone. So when we purchased the project, one thing we noticed was that there was this high grade core zone, and it looked to be moving south and sort of plunging down dip. And so that last drill campaign that I spoke of in the previous slide was essentially a step out drilling chasing that high grade zone. And we were able to, whilst we're not in a position where we think we've constrained it yet, as far as, you know, knowing exactly where it's going to go, we have been hitting visible gold in 2 out of every 3 holes. So, you know, it's been quite generous to us. We haven't had any dusters yet. This is a very simplistic diagram of the resource by confidence. So yellow is measured, that's your highest confidence level. Red is your indicated, and green is your inferred. Sorry. You can see by the image that there's significant confidence around the geology. It's predominantly indicated or better, and you can see where it's measured in. So this is a this is a view of the resource. You've got left is south, to the right is north, and we're looking west. I think we're looking west. You'll see that if you go down to the sort of middle left, the Andre Adit. So the Andre Adit is an existing underground working, essentially. It's one of the key access points for the historic mining. We've basically taken a drill rig underground, and this map here, these are the drill holes from the previous drill program, and you'll see we've fan drilled coming back on the resource and then looking to extend it further south, and we've attempted to drill down dip in certain sections as well. What we're doing now is we've actually moved the drill rig further to the left towards the end of that adit, and then we're going to do the same thing again. So what we're hoping is that as we go south and as we go down plunge, this thing just keeps going and this high grade core just keeps going. So all of the drilling is focused on adding ounces, but adding it in that sort of underground zone where we can add that to the underground mine plan. As I said, we're hitting visible gold in 2 out of every 3 holes, which is phenomenal. I think I've already discussed the recoveries. It's one of the most attractive parts of the deposit is the metallurgy. And just on that point, you know, when you pick up a deposit that's got 1.5 million ounces of historic gold production, and that, you know, the majority of that gold production happened over, you know, a couple of 100 years, you know that the deposit has to have simple metallurgy, because they didn't have advanced lixiviant processing, they didn't have cyanide processing in those early years. So to get that much volume of production, they needed to be able to get a good amount of gravity gold, and then later a good amount of flotation, you know, gold from flotation. So we sort of knew that we were on a good run going in on that basis. And as I said, the advantage to not having to do the cyanide processing, because you've got good metallurgy, is it significantly reduces your capex, but more than reduces your capex, it gives you tremendous flexibility on how big you want your mine or how small you want your mine. So when you actually build a mine, whether it's 500,000 tonne per annum plant or 1 million tonne or 1.5 or 2 million tonne, whatever size you want to do, one of the constraints you have is that when you're doing cyanide processing, there really is a critical mass you need to get to, you know, to invest in that processing. With those first 2 stages of processing being gravity, separation and float, they're very mechanical, they're very simple, they're modular. You can do them big, you can do them small, and the marginal efficiencies, it's sort of a linear curve. You don't have to meet critical sort of sizes. So what that means for us is, you know, we're a 40 million market cap company now. We don't think we need to take this thing to a DFS. We think it's a fairly simple business model. We think we can probably do a PFS and go to production from PFS, which means we don't have to spend as much money, you know, developing our studies. But also at the end of that, if there isn't $60 million there to build, you know, 100,000, you know, ounce per year operation, and we can only come up with $10 million, then we can build a mine for $10 million. It'll be a smaller mine, but we can do it economically because we don't necessarily have these huge critical mass parts that you might need in a deposit that requires lots of work on the processing side of metallurgy. So that's a huge plus for us. Now you'll recall before I showed you that outline of the tenements in red, only 10 square kilometres. In Australia, you know, we're used to having hundreds of square kilometres to explore when we've got a project. So 10 square kilometres is very, very tiny. However, if you look at the image on the right, you'll see these red zones. So these are target areas where we'd like to start drilling, where we think that there's extension of this deposit. The yellow zone there, that's the 1.1 million ounces we had before our resource upgrade. You could probably take half of that red extension that's below it, and that, if you added that to the yellow, that'd be where we are today. But you'll see from the rest of the area, if it comes up anything like what we've got, then we've got multiple, you know, multiples of where we are on the ounces front. And one of the reasons why we're really excited about the prospectivity is Usually when you look at target areas, you're working with rock chip assays, some target geology, maybe some geophysics, those sorts of things. In this case, these red areas are full of drill holes and they're full of underground workings. We're following the gold, we're following the historic mining. We know the gold's there because there's all the workings there. So we see very low risk in that this thing can't get a lot bigger. Just a little bit on the team. Myself and Mr. De Anna, we are unashamedly corporate jockeys. Our interest in this is just our equity. We see this as investors. We are not project delivery guys. Our view is to take this to scoping study, and somewhere between scoping study and PFS, we'll bring in a project delivery MD, CEO, potentially a new chair, to take it to that next stage. But what we want to make sure, as the company's largest shareholders, is that the plan is set. We're confident we're going to make the most amount of money out of that plan, and then we push the team in accordingly. So some of the people we've got around us at the moment: Dr. Quinton Hills, he's based in Brisbane. He's the VP Exploration. He's a structural geologist. That's really important for us because we're trying to take this thing from 1.5 million ounces to multiples of that. It's important that we get a handle on the structural geology, not just the metallurgy and these sorts of things. So he's of vital importance to us. He's supported in country by another exploration geologist, Ferro, who's a local. He runs our campaigns over there. We're supported by an exploration team that came with the project. So we were quite lucky that when we bought the project in 2019, the previous owners, London-based company, had an existing team. We kept the majority of that team, and we essentially put our own people on top of it, and we run it that way. Dr. Qintao Zhang sits on the board as well. Qintao's, he's a geologist, but that's not really what he contributes to the board. He has very strong ties into some of the Chinese SOEs and the Zijins and the Shandong Golds and these sort of groups. We like to run our company like an open book. We have a data room where everything we do gets updated. We've got a couple of large groups in the data room, some North American, some Chinese. We like to get potential partners, both either takeover or development partners, familiar with the company, familiar with the project, so we let people into that room very early. Qintao helps us with our friends in China. Mark Calderwood helps us out from time to time. Mark was a founding managing director of a company called Perseus Mining, which he took from early exploration into production, and it's a bit of a market darling at the moment. Mark's helping us out with strategy, and then there's a couple of other people as well helping us. Again, if you get a copy of this presentation, these last 3 slides are just the raw data for the peer comparisons. So if that's of interest, you can go and have a look at that. So I guess really the takeaways that I'd like people to get from our presentation is that the management are aligned to the equity of the company, probably more than most companies. We're funded. We don't need to raise money. We're moving through the scoping study towards the end of this year, which is not an expensive exercise. We've just started a second drill campaign. We see it as fairly low risk resource upgrade drilling. So we expect there to be lots of news. And we'd like to think that we're at the very early stages of our value recognition when you have a look at the EV per ounce. We're somewhat under the radar. I think once we get to scoping study, that's when we'll really start to sing about where we are. But we don't need to raise money at the moment, so we're in a fortunate position. Maybe Campbell, I'll leave that.
I've got some questions. Everyone, please message in your questions, and we'll ask them. Right now, I've got a few questions here. You referenced there'd been a few previous owners, and that's typical of life of an asset. It gets going, and then the market falls out, and then someone else gets it, and so on. But Was it ever because there was something found that made it uneconomic, or some fatal flaw, or was it really just kind of trouble catching up with the market over the many decades it's been bouncing around?
So when we completed our due diligence in 2019, we knew that the project wasn't going to be perfect because it had had some $40 million spent on it, in modern years, and we picked it up for nowhere near that. The two challenges that we identified was, and if you recall that map I showed you, the deposit's only 1 kilometre from the town of Kremnica. It's obviously 1,000 meters. It's not very far at all. Both the previous developers wanted to build a large open cut mine. The mine they wanted to build was something like 700 meters wide and 1 kilometre from town, actually less than 1 kilometre from town when you actually take the pit dynamic into place. Now, they never went for an approval, but we can tell you from our due diligence they weren't going to get it, because the town was not interested in what would be a Kalgoorlie super pit next to the town. So when we bought the project, it was only on the basis that we thought we could build an underground mine there. Maybe 600,000 or 700,000 ounces, maybe 1 million ounces we can get underground, and then come back for another half a million ounces in open cut. But we would do that on, say, a 50 meter wide pit, not a 700 meter wide pit, because obviously when you're pitting the top of the resource, you only have to get like that. Whereas if you're trying to dig it all out open cut, you've got to actually go really wide to get down to the bottom. So that was sort of a key challenge for the previous owners. The other part to it was, I think it was 2014, Slovakia banned cyanide. I think that was the nail in the coffin. Those two things, the previous owner thought, oh, this is just getting too hard. And then they moved into DRC, which I can't understand why they thought that was going to be any easier. And obviously the gold price back then wasn't anywhere near where it was now. And there's a huge difference between $1,100 an ounce and $1,300. And there's a monumental difference when you get to $1,500 and $1,800 an ounce. We could be getting a concentrate operation up for $50 million, at $700 an ounce or $600 an ounce, or maybe even less. So not only are the margins healthier, but the risk profile is lower. Because when you're doing concentrate operation, you can start very, very small. So the risk profile for us going into it's just a different market. And it won't be the first time that the third or the fourth or the fifth owners make money because they get the timing right. As you sort of alluded to, timing is a big part of our game.
Okay. Regarding Slovakia, can you comment on their homegrown talent, not just for white collar professional staff, but the underground miners?
Gino, do you want to pick that up?
Sure. So there's actually a depth of experience within Slovakia, and a lot of it is around gold and also industrial minerals as well. But there's also historically underground coal mines that are still in production today. So there's definitely a skilled labour force as far as it goes for their knowledge base on underground mining. But in complementing that as well, a lot of their labour, given where they are in terms of Eastern Europe, a lot of the labour is actually sourced from neighbouring countries as well, where they've also got quite a depth of experience as far as underground operations are concerned as well. And as Russell mentioned, the mine that's 30 kilometres due south of us at Rosalia, that's a high-grade underground operation as well. So there's underground mining going on right on our doorstep at Sturec. So there's no difficulty for the company in terms of skilling up and retaining the necessary skills to bring the project into production either.
And any thoughts on a U.S. listing and someone asked Canadian listing? But we do have a multi.
So we've dipped our toe in the water. Stuart's going to help us with an OTC sort of quotation, and we'll start. Yeah, we'll start there, and then we'll sort of see how we go. As I mentioned, we are looking to do a LSE standard listing. And again, the reason for both of those is to be able to promote, not so much raise money. I hate raising money, Obviously, we have to do it from time to time, but I'd rather spend 99% of my time promoting and 1% capital raising. But we need to be listed in those jurisdictions to really get those investors on board. So you're right. We need, we're starting with this OTC, and then we'll see how we go.
Right. I'm going to pass it over to Stuart to take it from here.
Yeah, thanks for the presentation, Russell and Gino. And so, how did you come across this kind of project originally, and why pivot out of lithium?
So the pivot out of lithium was, again, it's that mantra of return on equity. We were spending money, we were having reasonable exploration success, but we were getting no value, and we're having a declining spodumene concentrate price. And the price of spodumene concentrate went below production price. So, in that market, you can't get any attention from explorers. So we turned the tap off. I think the stock traded from 20 cents down to 1 cent. But we still didn't raise any money until we got back to 16.5 cents. We did that because we were disciplined and because we owned the company. So essentially during that time we said, all right, well, we're not going to twiddle our thumbs. Where do we think we can add some value? We looked at the gold sector. We picked this up from a UK listed company. It was somewhat of a strange asset sale. They had a project in Zambia, a project in DRC, both gold. They wanted to focus on the project in Zambia, and the project in Zambia had a 20% free carried owner, and that owner called the shots on the AIM listed company. So what you had was a company that wanted to spend all its money on a Zambian asset and didn't want to spend a cent on anything else because this crowd's free carried on that project. So we picked the project up for a song, and for us it was a no-brainer. It was a timing thing. Gold price was moving up. We could see that there was some exploration that should have been followed up that they didn't. And as you saw from the drilling there, we hit visible gold in 2 out of 3 holes. We got extremely lucky with our pickup.
Very good. And then just want to talk about permitting in Slovakia, and you could talk about like the steps of permitting and what was the most recent mine to be permitted in the country.
Gina, do you want to pick up on that?
Sure. So in terms of permitting in Slovakia, it's Russell kind of alluded to the fact that the mining permits themselves, they're given with an infinite time frame around them. So what you have to do is just maintain a level of operations, in our particular case, maintain a level of operations in the underground adits to extend the life of those particular permits. In terms of going through and permitting, for example, surface workings or the surface drilling permits and that sort of thing, it runs its usual course, as you'd expect in other jurisdictions around the world. You've got to apply, obviously, for the right to explore, and then wait your time out for it to be advertised before you can actually get your permits granted. As far as it goes for permitting, what we describe as being the broader development profile for the company, being that, as Russell mentioned, the bulk underground operation. That's one of those things where you have to go down your typical pathway. You've got to do your environmental analysis and your studies that address those particular issues and do your consultation work. So a lot of that work we've already commenced, and it's underway at the moment. And one of the biggest drivers for the company right now is actually just addressing and Russell again mentioned this earlier in the piece, just this social license to occupy. So we've just in the process of resourcing the company further in terms of making sure that we've got the right people on the ground to address those advocacy requirements. And that'll see the company just effectively positioning itself to take those permits to the next level and really start to get more community level support for the project as well, and see us actually take it forward to the next phase of development.
Stuart, to answer your question directly, the last permit to be given was to us, and that was I think March last year. MetalsTech was awarded an underground mining license, so we have the right to mine underground at the moment of a certain scale. We don't have the right to process it at surface, but we have the right to mine certain sections of the underground workings. That's something that we applied for, and that was granted by the court system, the same system that we go through for full sales commercial mine. And prior to that, the Rosalia mine 30k south of us, they had an expansion license given to them for, I think they're doing 20,000 ounces a year now. They were doing a lot less before that. So permits are being given. We have been given a permit. We've been through the process. It took 6 months. It was fine. Obviously, if we try and permit an open cut mine, it would be challenging. We'll have a lot of influx of views on that. But we think the underground mining is a pretty low risk path. We've already got a permit. We just have to expand on it.
Yeah. And so all the other gold producers in the country are producing concentrate?
Well, there's really only the Rosalia mine to the south of us. There have been other gold producers, but most of those mines are either dormant or to a level of production that's not worth sort of noting. It's really these 2 mines that are the ones of note.
Okay. And then, switching from an open cut mine plan and operation development scenario to underground, what would be your kind of response to any pushback you might have from people just looking at the grade and thinking it's too low for,
well,
underground?
Again, I mean, it's kind of dangerous to sort of say, 3 grams on someone's mine is not the same as 3 grams on another. It's like all coal deposits. They've all got different operating costs. But look, what we do have is we've got 650, 700,000 ounces of 3.3 gram a ton gold that sits on average. It might be a 40-50 meter zone that you would take, and you get that material across that area consistently. So there's a lot of room for error when you're it's going to be very generous for your mining when you're mining a 20-30 meter sort of section. It's transverse mining concept. We're backfilling the waste. The mining methodology is pretty simple. The ore deposit is this big chunky, thick deposit. We'd love to open cut this thing. If we could, we'd probably do it at $300 an ounce. It'd print money. But the reality is the community won't support a 700 meter wide pit. But 3 grams a ton, you got to remember 3 grams a ton used to be the benchmark in Australia 15 years ago. When the gold price was $900 an ounce or $1,000 an ounce. Now we're at $1,800 an ounce. It's not 3 grams anymore. Might be 2 grams. As long as the mining methodology is sound and you're not sort of chasing these sort of veins everywhere, you can make a lot of money out of 3 grams a ton.
Yep. Thank you. I'll pass on to Adam.
Adam?
Thanks, Stu. Yep, I just had to unmute myself there. So thanks, guys. So I'm just a couple of questions come to my mind. For this $50 million conceptual build, what kind of mining rate do you think that would support?
So we'd like to get to 100,000 ounces a year. That's our starting point. It might be a little bit more than 50 million US. It might be around 70 million for that, but it won't be 100. There's, for a concentrate model, there's a lot of, capital that you don't have to do. You obviously don't get the benefit of squeezing all the gold out, but when you're nearly getting 90% recovery on that, then that's not so much of an issue. But we'd like to get to 100,000 plus, and that's really, just because Gino and I think somebody mentioned we come from an M&A background. I used to be involved in things where if something wasn't more than 100,000 ounces, the universe of buyers for the project, shrunk by 75%. So, there's certain industry metrics that you ideally want to get to. You want to have, a resource of north of 2 million ounces. You want to have production rate of more than 100,000 ounces. Then all of a sudden, a Dundee's interested, an Eldorado's interested, a Zijin's interested, and all these sorts of things. So, a lot of it's driven by the deposit, but, you're trying to do your best to meet the market where it wants to be.
So, Russell, just backtracking for a moment there, that 100,000 ounce a year target, that's based on the full, what was it, 94% recovery?
No, that'd be based on, I think it was around 7. We haven't really spoken about it, but let's say 75%.
So, okay.
Sorry,
And then-
85%. No, 85%. Sorry, not 75%.
Yeah, 74% in the float, 88% in float. 74% gravity, 88% in float. Sorry.
Okay.
I
So,
want to caveat this. We haven't released anything like this. This is purely just we're
no, it's
riffing
fine.
here.
It's just, yeah. So just to be specific here, you guys have talked a lot about concentrate recovery. What do you mean? Do you mean it seems like maybe you mean a gravity concentrate that would be,
So
that would
essentially two products. You'd have a gravity gold and you'd have a float product. So potentially two products.
okay, so your gravity gold is, you're talking about native electrum, and you'd smelt it on site into doré. Is that what you're talking about?
Well, you could sell it. Essentially sell it ex-mine gate.
So you're talking about, again, I'm sorry, Russell, but you're talking about a gravity, you're talking about, you're talking about free gold, or are you talking about a pyrite / arsenopyrite concentrate with gold in it?
Like a free gold and a float con.
And the float con, that would be a pyrite or arsenopyrite concentrate with gold and silver in it?
It would have some silver in it. I think, again, we haven't released details of like potential products, but for example, you might have a 30 or 40%, 30 or 40 gram a ton concentrate, but you might have a 60 or 70 gram a ton concentrate as well. Depends on how you do your processing.
Yes, I understand that. So I'm trying to, so, okay. So yes, you don't have, so you're going to have a free gold concentrate that you could smelt on site or you could sell at the gate. And then you're going to have a second concentrate, which is a sulfide concentrate, which you would also sell to recovery somewhere else, maybe outside of the country.
So you might sell it to like a Trafigura, or you wouldn't sell it to Trafigura because they might not be the best payers, but they're an example of someone that you could sell it to in Europe. Yeah.
Okay, I'm just trying to understand specifically what the products are you're talking about.
Well, again, we haven't actually released any product studies based on the network. We've only released details of the gravity separation and the float recovery rates. We haven't actually gone to that stage yet. That'll be part of the scoping study.
Mm-hmm. Certainly, but the mineralogy, I mean, you know that right up front. I mean, that's the first thing you do.
So as far as cleanliness goes, there's no arsenic. There's no high levels of calcium. We thought there might be some antimony, but on further investigation, there's no antimony. And when I say there's no antimony, there's no relevant levels of antimony. There's obviously little bits of everything. So there's nothing. There's no penalties that we would expect. It's a very, very clean. It looks like it's going to make a very clean product.
So when you're talking about the gravity concentrate, is there any reason why you wouldn't smelt that on site?
No, you might do that, but again, we just haven't spoken about it. That'll be part of the scoping study. We'll have to work out what the cost
I guess I'm just saying there's no regulations, permits.
Nothing stops you from doing.
Nothing legally stopping you.
No.
Or via a difficult permit or something like that.
No. But as Ross said, the scoping study is assessing that as a potential option. So whether it's sold mine gate as a product that's then transported to another jurisdiction that's then further processed, or if we smelt it into a doré on site, that's also been assessed at the moment.
And are you guys aware of non-cyanide opportunities for recovery of gold from a sulfide float con?
So we did some. So when we purchased the project, the previous owners did some test work on thiosulfate, and scratching my memory, I think it was 92 or 93% from thiosulfate.
Yeah, that's right.
On the gold, on the silver was rubbish. It's like 45% on the silver. So the thiosulfate, they couldn't get much love for the silver. Thiosulfate's been used. I think it was around 2014 that Barrick put thiosulfate in the Goldstrike mine. I think they're doing 400,000 ounces a year or something. It's 2 or 4 million ton, maybe 4 million ton per annum circuit that they're using. They're using thiosulfate for a different reason though, not because they can't use cyanide, because it actually works better on their ore. We've got an exclusive license to use thiosulfate, at least the CSRO process, in Slovakia. We've also got an exclusive license in Bosnia as well for that technology. But again, you know, that's something that we might look at later down the track. If the gold price is north of $1,500 an ounce, it's awfully enticing just to stick to a concentrate without having to worry about another $50 million circuit that's not cyanide, that might have been successful in a few areas, but it hasn't been used for 20 years regularly by a lot of people. So, you know, we still see that there's some technology risk with thiosulfate, and you know, with the gold price being where it is, you know, the focus would be on concentrate and then having a look at that down the track.
And again, in Slovakia, they've got an out and out ban on cyanide. There's no gradations as far as, you know, you're using it in small batches, in tanks, contained, you know, they don't care anything about that.
So they banned it, you know, when half a dozen of those countries, you know, banned it. I think it was that spill in the Danube that caused it all. Now, when Slovakia banned it in 2014, there weren't really any mines that got affected by the legislation, so it wasn't difficult for them to push it through because it didn't affect anybody. You know, if we get a mine up and running and the community's, you know, benefiting from it, you know, hopefully there's a chance to sit down and say, look, the science says if you use it properly, it's okay. We use it in Australia, we use it in the US, we use it in Canada, we use it everywhere. But at the moment, you know, there's no real advocates for doing it. One thing we do know is that the group south of us, the Rosalia mine, it's only a small mine, sort of 15,000 ounces a year. They pay a much lower royalty rate to the government. And the reason why they struck a lower royalty rate deal was on the basis that they said to the government, look, you're not letting us use cyanide, so we're not getting the most out of the deposit that we can. We shouldn't have to pay the normal royalty rates, and I think their royalty rate's half of what it's supposed to be slated to. And I think our royalty, if we adopted the same royalty profile as them, it'd be around 1.6% or something instead of 3.2%. You know, overall. So the government's already recognised that they are, you know, hurting companies developing it, but there's really no champions for change yet. You know, so.
And are there any other royalties, private royalties that apply to the property?
No.
Nobody kept anything on it.
No.
Are people worried about Slovakia honoring royalty agreements? Is that part of it?
Well, it wouldn't be Slovakia. It would be the owner of the project. I mean, that's your counterparty risk. It's not Slovakia.
Well, I mean, that's the counterparty risk, but still, you're depending on, if somebody had a royalty on your property and you weren't honoring it, then it would be in part Slovakia that would try to, you know, that they would appeal to in order to get you to honor the deal, if you had one.
If you wanted your jurisdiction of arbitration to be Slovakia, I might pick something a bit different. I'd probably look at the company.
Well, I guess I don't know.
I know what you mean, but no, there hasn't really been. I mean, the Slovakian regulatory system, there hasn't really been a lot of problems. I mean, you still get environmental groups that challenge. You know, they still have gazetting, they still have public forums. You know, the Sierra Club can still pump money into a group if they don't like the look of the mine and all that sort of stuff. But you know, it's a court system. It's transparent. You know, we don't see a lot of paper bag stuff going over there that you might think with some of the sort of ex-Soviet sort of jurisdictions. At least we haven't seen it yet. Maybe that's still to come. I don't know.
I mean, I'm no expert on Eastern Europe, but sort of Hungary seems sketchy to me, and Romania seems sketchy to me as far as the, you know, a legal system, you know, that honors, you know, property rights and all that kind of stuff.
Well, look, the project's been owned by two previous, you know, non-Slovakian companies, and in our due diligence, we haven't seen anything to suggest that anyone had a problem with tenure issues. The only thing that we've seen is that people had a problem, you know, with our due diligence, people had a problem building a large open cut mine there. But that was a social challenge. That wasn't that wasn't a government challenge. One thing that was present for the previous owners that we don't have was the mayor of Kremnica, a lady came from the social sciences background who was dealing with the previous owners, and I don't think she was in favour of the mine at all. The current mayor of Kremnica he's a contractor. He's a stone cold capitalist, so we're enjoying working with him.
And so you guys have permits for underground mining, at least in some areas of the mine.
Yeah, we do, yeah.
And what is it going to take to get permits for the processing that we had just sort of discussed on a loose basis?
So it's essentially the same process, except that instead of applying for that, that section of workings and how you're going to extract it, you're going to use explosives. What's the scenario and where you're going to take it and what's your footprint? It's exactly the same process, except obviously we'll do it on a larger scale. In addition to that, we need to get a separate permit for processing on site, on surface. You need to tell them where you're going to put your waste, what's the environmental impact, what's your rehabilitation plan, all that sort of stuff. It's all the same things that we would do in Australia. The reason why that permit for us last year was important was, one, we wanted to get our permit so that when someone asked the question, can you get a permit, you can say, look, we've done it to an extent, we've done something. And secondly, we use that extraction license to remove bulk ore from sections that are relevant to the deposit, so we can do decent metallurgical test work, run proper processing test work, which we do in Australia. So we take that bulk ore back to Australia, to a place called Nagrom here, which is a group we really like working with, and we do bulk testing here. So it's got utility from that point of view. In theory, we might be able to sell the material, but that hasn't been the plan today.
Once you guys have perhaps at the pre-feasibility level, what the footprint is going to be for the processing and the waste management and whatnot, what's the lead time to get a permit for all of that?
6 to 12 months, something like that. There's a strict sequence of events that need to occur, and then there's a gazetting period for each of those events.
Okay, there's not a 3-year environmental monitoring of all the bugs and
oh no, sorry, you do have to do those sorts of things, but we do those things, we do that from scoping study. Once you map out your scoping study, that's when you start doing a lot of those things, and they might be 12 months, not 2 years.
Okay, let me pass it back to Campbell for any additional questions and comments. Thank you, guys.
I think we're good. We've covered a lot of ground and we're over our hour. So I want to thank everyone for tuning in, at least in North America and America. This is a new idea, so really exciting. And I think there's a lot to pay attention to. And with that, I'll pass it back to Russell and Gino to close us. And do ask you on your way out, please share your feedback. And if you want a copy of the replay, it'll be available in about an hour at amvestcapital.com/replays. Guys?
Thanks, Campbell. If anyone has any specific questions they want to speak to myself or Gino, feel free to reach out. On all our announcements, we have our mobile numbers and our email addresses. And if anyone wants a deep technical dive, we're happy to set up a meeting with our VP Exploration, and he can do lots of cool things, run through the models, online on a Zoom or something like that. So we're very transparent. If anyone wants to deep dive in any matter, we're happy to accommodate.
Thank you. Very good.
Thank you.
Speak later.
Thanks.
Bye.
Thanks, guys.